Thank you for checking out Fieldman, Rolapp Associates Municipal Market Update. The data is as of April 15th, but we are recording it the following Tuesday. The MMU is posted approximately the 15th of every month. My name is Adam Bauer, and I serve as CEO and President of Fieldman, Rolapp Associates. Fieldman, Rolapp Associates is a municipal advisor to government. On our first slide, I'm showing you something that I've never included in an MMU. And while this has a green tint to it, I think our team wanted to use green to make it match the rest of our presentation. This is the Bloomberg screenshot of the 30-year mortgage. So those of you who are familiar at looking at a Bloomberg screen, that green colorish would typically be orange. And so what hopefully you're noticing, though, is the sloped line going upward beginning in January of 2022. Now, the reason why I'm showing you mortgage rates is we oftentimes use mortgage rates to help illustrate what's going on in the municipal market. So most individuals have at least considered getting a mortgage, and so have had that conversation about what it costs when rates change. And so hopefully you're walking away looking at this slide, recognizing that the cost to take out a 30-year mortgage is significantly higher than it was at the end of 2020 or 2021, I apologize. And that the same type of activity has taken place in our municipal bond market. And so as we walk through that, let's get to the next slide, which is one that our viewers have seen many times. Now, as a refresher, this slide is, there's interest rates on your left, percentages. Then at the bottom are years. Now, the gray bars represent the range of interest rates for each one of those years, going back to 2005. The red line represents the MMD as of April 14th, 2022. So the MMD, AAA MMD, what AAA is the perfect credit. MMD is a municipal market data yield curve, and there is an interest rate for every year. And that's what we've illustrated on that side there with that red line. Now, for much of the time we've done MMU recording, that red line would be scraping the bottom of those gray bars, and that signaled that we were at historic low rates. Now, what you're probably noticing now is we're towards the middle. So if you go back to 2005 on the long end, we're a little bit low on interest rates, but on the short end, you can see there that it's closer to the top of those bars, and we are relatively high on the short end. We've heard a lot of talk about inflation, which I'm going to show you a slide about. And then we also have had a lot of talk about the Fed working to raise their overnight rate, which typically will start having the other rates follow, or in this case, the other rates are leading. Now, we've talked about mortgage rates. In the past, I've talked about treasuries. And one thing I haven't spent a lot of time talking about is because since we shut down for COVID-19 in 2020, we haven't really seen credit spreads be very wide. And what this is investors will charge a higher rate for the lower the credit. So if we take a look here, the red line represents a AA credit. So I've already told you the AAA is the best credit, AA is the next. And so investors will require the spread, this much more yield for a AA credit than they would a AAA credit. And then that also for the single A and the BAA. Hopefully what you're noticing is this upward tick. This upward tick here on the far right is showing that investors want more return for the lesser the credit. And so that's another thing. So you have rates that have gone up, then you've had credit spreads that have gone up. So most issuers are not only having higher interest rates because of rates going up, but also the credit spread. So it's a double hit and significantly more cost for municipal issuers. And on our next slide is the yield curve, the MMD yield curve I've talked a bit about before, just showing you how it compares over time. Now, I've talked a lot about this being relatively flat in recent years, and it remains that way, but it's even flatter. And so that red line is as of 5 years ago. And you can see right here about year 15 is where we cross. So the green line is the light green there is the current MMD as of the 14th of April. And hopefully you're noticing is the short end is higher, but the long end is just a little bit lower than rates were 1 year ago. And then, I'm sorry, 5 years ago. And then that black line represents where rates were 1 year ago, where they're very low. So short end has certainly risen above what we saw 5 years ago. But overall, hopefully you're noticing is in the recent times or recent last few years, we're significantly higher on interest rates than we have been. Now, what's causing this is there's been some real outflows from municipal market bond funds. And there's been a greater outflow in some of the high yielding funds, which is probably why you're seeing those credit spreads go up. But if there's a green bar in this line, that means money's flowing into municipal bond funds. If there's a red line, that means money's flowing out of them. And we've seen a pretty consistent outflow. And so this is our demand. And so if there's not demand, then you need to have cash on hand, or the bonds won't be able to sell. So hopefully that at some point this abates and we quit seeing outflows from municipal bond funds. Now we are partially protected here because there hasn't been that much in issuance. So the volume or the supply has been low as well. And that's what we look at this next slide. This next slide, we really try to highlight kind of last 3 years. We look at 20, 21, and 22. So hopefully what you're noticing is that light green line is below 20 and 21. And so we've had less volume. But that black line represents 2021, and the red line represents 2020. And then we're below that. And but hopefully you also notice is these bar charts are below that even further. So we have very little supply coming into the market. So our demand is down and our supply is down. And that's helped make it so rates aren't even higher than they've already increased to. Now, we started showing the S&P 500 a few postings ago, just to try to put it in perspective. At that point, we really were seeing a real decline in the S&P 500. That has abated for now. It kind of looks a lot like some of these other ups and downs. But we just thought, given a lot of the uncertainty, it would be good to kind of monitor the S&P 500 as well. Inflation. So I told you it was bad when we saw the 7% mark here, and now we have an 8.5% mark. And so this is another thing that's pushing interest rates upward. Keep in mind, many of the bonds that investors buy are considered fixed rate, meaning that interest rate does not change. And so if you buy a bond and then you have inflation after the fact, you've eroded your kind of takeaway, if you will. And so investors are very unfriendly to inflation. And so when you see inflation marks like this, it certainly does cause investors to want to have a higher yield to protect them. Now, here's we're just trying to show, it's a chart I think we've just shown once or twice, and it just tries to show some of the increases. And one of the things we were seeing was the US Treasury was increasing at a greater pace than the MMD, but not so much anymore. If you look at this last few cycles here, maybe the Treasury has gone up a little bit more, but certainly the MMD has followed pretty closely there. So both Treasury and MMD have gone up. Finally, here's some of the economic data to watch in the next upcoming weeks. To the extent that one of these comes in dramatically different than expected, certainly would expect that that would be a market mover. On our last slide, just really try to highlight here the Fieldman Rolapp registered municipal advisors. I encourage you to reach out to any one of them for additional information. You could also send me a note for information that you'd be interested in hearing about. But for now, I thank you for your time and look forward to talking with you in May.